What is up, everybody? This is John Barr with Prime Homes coming to you at the end of 2017. So I wanted to change up our market update for this month, and I wanted to include kind of an overall picture of the four major metros and Texas as a whole to see how our market and the Texas market is really performing. So you can kind of position yourself to see where you want to be and how the rest of our great state is doing. So we'll go ahead and just jump right into this. Now let me expand this. There we go. So Texas is an overview. Our average sales price was sitting at 207, just under 274,000, which is still a 3.0 increase year over year. Median sales price is 223, which is 3.7 increase year over year. Total sales, we sold at 24,000 homes in Texas this last month, which is a 6.6 increase in volume from this time last year. Unemployment, we're just under 13 million employed, so we're encroaching on that every single month, but because we're growing about 1.5% increase from this time last year. Unemployment, we're sitting well below the national average at 3.51, which is a 1.08 decrease from this time last year, which is really good. Months inventory was at a 3.5 months inventory across the entire state. So that's basically saying if nobody would decided to sell their house, it would take just 3.5 months in order to sell every home in Texas. And a balanced market is 6 months. So anytime we're below that 6 months, there's strong economic forces for that median sales price and average sales price to keep increasing. So I don't see that really slowing down anytime soon, considering we have a record low unemployment rates and months inventory continue to decrease. So it's a great time to be a homeowner in Texas, well, if you're renting or just for your personal home. So we'll go ahead and break down each major metro based on kind of the same statistics I have here, but then I'll kind of show a little bit over year increases in those markets too, so you can kind of see what each one is really doing. So first up, we have Austin with an average sales price of $366,000. The median sales price is well above the rest of the Texas market at $290,000, which is 2.5 increase year over year. Total sales, 2,196, which is 3.7 increase year over year. Employment, just over 1.1 million, which is a 1.7 increase year over year. Unemployment is sitting at a 2.58, and that is the lowest in the state of Texas for a statistical area, which is a 0.74 decrease from this time last year. Months of inventory, just sitting over 3 months of inventory. So you can see a median sales price right here about January 2012 was our lowest, and we have been rising ever since. And you can kind of see they follow the same kind of pattern where it goes up in the summer, goes down, spikes in around the December time frame for all those Christmas shoppers wanting to get a new home before the holidays, and then goes down in January and continues to rise. So this is something I'm going to continue to watch to see if it starts acting abnormal or if these peaks stop getting higher every single summer. So here is something I just started to put into my market updates as the year-over-year appreciation rate. So this kind of goes right along that January 2012 was the bottom of our real estate pricing here in Texas, where we were decreasing year over year 10%. And then it shot up, and you can see here 13, 14, 15, we were hitting 15% year over year price increases. But since about 2015, you can see that we're starting to trend down, getting back to your historical averages. Nationwide, I've always heard that home values increase on average anywhere from 3 to 4% a year, and we have been blowing past that, and now we're starting to trend back down in Austin to the more average year-over-year appreciation. So it's not appreciating as fast. I think we've gotten to the point where prices have shot up, but wages now need to start increasing so homes can start being purchased and people can start affording these houses, because values got so high so fast, you're starting to cap a lot of people out on debt to income values. So wages need to increase in order for these home values to continue to increase, which I expect them to do. But I don't see them hitting in Austin this 12, 14% like it had in 13, 14, and 15. So now kind of where to market. Now remember, the average median sales price was about 223 in the state of Texas, but Austin was about 290 for the median. So you can see 223, you're sitting at a 1.8 months of inventory in Austin, which is very, very, very low. But their average median sales price is sitting at 290, which brings up to 2.66, which is still very low when your average is 6 months. But you really don't start getting above 6 months until, let's see, you get into the 850,000 price range, but then it drops back down to 4.88. So prices are still increasing at a drastic rate, especially at these lower income brackets, and lower where they can afford these lower home prices. So that's very good for the Texas market. And if you have housing in these price ranges where your typical rentals are, your home values have strong economic forces to keep increasing. Dallas, we're sitting at just under 300,000, 4% increase year over year. Median sales price was 230,000, which is a 4.8% increase. Total sales 86, just over 8,600, which is a 14% increase year over year. So a lot of homes started selling from this time last year. Employment, with Dallas is the biggest market as far as employment goes, which is at 3.6 million, which is a 2.7 increase year over year. Unemployment 3%, down 0.83% from last year. Now, months inventory in the entire, this covers like 6 counties, and their entire month's inventory is sitting at 2.59. So Dallas is the one market that is still just red hot and is seeing massive appreciation year over year. So very same, bottomed out here around the 2012 and has been climbing ever since. Now, this is where I was saying that it's just absolutely insane that every year it's been hitting these 10 to 13% highs. I mean, even January 17, it was up another 13%. So with those record low months of inventory and these very high appreciation, low unemployment, I expect Dallas to continue to appreciate at a very rapid rate. So now where to market. The 230,000 was their median sales price, and that's sitting at a 1.51 a month's inventory. So that's why you're seeing it seem so hot and such fast appreciation in Dallas, is because, I mean, you don't even get over 3 months inventory till you're at the $350,000 price range. So still a very good market to be in and buying in, to own homes in, especially if you're renting and you're holding these homes that are in these $100,000 to $350,000 price range as far as appreciation is going to go. Houston, 284,000, not just under 1% increase year over year. Median sales price 225, 0.09% increase year over year. Total sales 6,100, 7.4% increase year over year. Employment just over 3.1 million, which is a 1.1% increase year over year. Unemployment, which is a 4.11, which is down 1.22 from this time last year. So I think Houston was a different market, as they got hit with the oil slump this last several years. And they're just now starting to pull out of it that's why you're seeing much higher decreases, and their months of inventory is sitting at 4. So this is still recovering from Harvey and the devastation that they saw over there as far as their home prices, but it has been climbing out of that a very healthy rate and is getting back to where it normally was, and with the rest of the state of Texas, with the home values and total sales. It's where they historically have been, and I think I'll continue to see these prices to increase as more homes that can't qualify for financing are bought and rehabbed by investors or the homeowners with insurance, and they decide to sell those. So you can see they have a little bit rockier of a market back in 11 and 12, but it still has been increasing every single summer. So we're going to continue to watch that. This is your year-over-year appreciation, so you can see that Houston, like Austin, is trending down as to their historical highs, but they are still getting some great appreciation. So it's something I want to continue to watch as more and more of those Harvey homes become available, and since there is still such a demand for housing over there. So the price ranges, what was the 225 is our median sales price in Houston. So you can see that falls right into that 3 months of inventory. So not as hot as Dallas or Austin, but it's still pretty hot, sitting at 3 months when the average is 6 months, remember. So there's still great forces to keep pushing prices up, as there is a shortage of homes, especially in these lower, more affordable, medium priced home national averages, because you don't get over 6 until you're over the $350,000 price range. for Houston. So now we'll head to San Antonio. The average sales price was 241. So San Antonio is still the cheapest market in Texas, and historically has always been that way. And I don't really see that changing anytime soon. But it is still appreciating, and you can get great cash flow out of here, considering the home prices are cheaper and rents are up and they are high. So we're at an average sale price of 241, which is 7.51 increase year over year. Median sales price 200,000, which is 7.1% increase year over year. Total sales 2,300, up almost 10% from this time last year. Employment was just over 1.1 million, so we're sitting real good as far as employment goes, at a 2.3% increase year over year. So a lot of jobs have really been flocking to San Antonio, and I think that is attributed to the home values and just overall affordability of San Antonio as far as Texas as a whole. Unemployment was 2.86 and a 0.94% decrease from year over year. Months inventory sitting right at 4, right along kind of with Houston. Very similar trend as everybody else, just kind of every summer, prices continue to rise, dip down, spike in December, go down in January, and continue to rise into the summer. So this year we got an early spike in November, and I can in December it'll probably look a lot like back in 2015, and then drop off in January, and I expect it to continue to rise. Year over year appreciation, like San Antonio's always been, it's kind of the slow and steady market, so you didn't get those 13, 15, 17% like you were getting in the other major metros, but you are getting consistent 10% across the board, and even into 2016, you were getting into 7th. So it's trending down, but not as drastic of a drop. So I expect San Antonio to, as far as year over year appreciation, compete or beat some of the other markets, just because our median sales price is 10% lower than some of the other states or some of the other cities. So I still think it's a great time to be owning homes in San Antonio as some of the other markets, as we start hitting those affordability issues. But you can still see that we don't hit those 1.5s like you do in Dallas, but we still have sub 3 months of inventory at the $200,000 price point. So I've been in this market and I study San Antonio every single month at a much more microeconomic level. So I know here in San Antonio that these price ranges have been drastically dropping, and their inventory is being sucked up into these 250 to 300,000 across our entire metro. And so that kind of really breaks down how I see the Texas market really performing. I see us continuing to rise, contrary to what the National Association of Realtors, or TAR, was putting out, saying that with this new tax reform, it was going to hurt middle-class homeowners and hurt our housing, and they're saying it's going to drop our prices 10%. I really don't see that, because if you read a lot of these tax reforms, not being able to deduct state and local income taxes, that's not really going to hurt Texas as bad as some of the coastal states. So I think we're going to have a lot of people moving here, which is going to increase demand for housing. As long as everything stays good on a world scale, I think Texas home prices are going to continue to rise, and we're going to see months inventory continue to drop. So I think it's going to be good for Texas, because we have traditionally more affordable housing as some of these areas, and we don't have state taxes to deduct, and we can cap our 10,000 mortgage deductions. So you really don't hit those price ranges until you get into 300,000-400,000. You start getting over that 10,000 just in real estate taxes. So I think at the lower price ranges, the sub 400,000-500,000, we're going to continue to see those prices increase. Maybe at the higher end, they start coming down. But I don't think that's going to hurt where the bulk of our inventory and the bulk of our buyers buy at, which is going to be that $150,000 to $350,000, $400,000 price range. So if you guys have any questions, you can visit our website, check us out on Facebook. Our website is currently down right now, but it should be back up here in the next couple weeks. If you are trying to get in touch with me, you can look me up on Facebook at John Barr. And I hope to see you guys. Hope you had a great 2017, and looking forward to a great 2018. All right, guys, take care. See you next month.